Today is Sunday, and I just want to make a quick video going over how to understand and to possibly trade the trade indications that are in the trade indications channel. The fact is, even though we have a live room, I've noticed that out of more than 90 premium members that we have, only between like 30 and 34, it seems to me, are able to make it to the live room, which means only about 1/3 are able to make it to the live room, which means most of the members are just looking at the trade indications here. And I just want to go over some basic concepts here, just basic ways of understanding price action as it relates to these indications. So first of all, as far as the regular daily levels, those are posted shortly after Globex opens, most evenings the day before, right? So all of these levels, the buy level, the sell level, the midpoint, of course below the midpoint, you're looking to take a short. By Friday afternoon, this is the end of Friday, a lot of the markets already were way below finished the day way below the sell level. Even crude, it doesn't look like it went anywhere, right? Closed right at the midpoint. Actually, earlier in the day was nicely above the midpoint. And of course, above the midpoint, we're looking for price to hit the buy level and go beyond. With the S&P, what happened was, by the time 7:30 came around, so 7:30 Eastern, is when I post in the trade indications channel, price already broke the sell level and got to a fairly important price to us most of last week, 52.16. So 52.16, again below the midpoint, sell level, and 52.16 is hit. And this is where I begin to post. So first of all, to kind of put things in perspective, 8 out of 10 times after price breaks a level, we expect it to retest it again. So given this background, let's now move over and look at what to do with these trade indications that I post every morning, sometime between 7:30 and like 7:45 a.m. Eastern, about 2 hours before US session opens. Right, so again, shortly after 7:30, you can see the timestamp over here. This is when I post that now that 16 was touched, above 16 there was 21, 24, 31, and 42. But if 16 breaks again below, we should expect 02, I'm sorry, 08, 02, and 51.96. So now let's take a look at the chart. Alright, so 734 is right around here, right over here, and price is around 25. So what does that mean? So the first target, if you remember, was 31. So, and they always say fade the targets. If 31 is the target, you wanna at least protect yourself if you are in the long between like 29.50 and let's say 30 even. Right there, you already begin to protect yourself just in case. So by the time I posted, there really wasn't that much room. I mean, maybe like 4 points, maybe 5 points. That's all that was available. Now, the test 31, it was 31, right? By 8 a.m., there was the Zoom room is already open, and I present my preliminary plan. So now these trade indications are basically the summary of what I would go over a few minutes later in the live room. This is a summary. I go into a lot more details in the room. So in any case, what I was talking about in the room, again, just like in the trade indications, is that if they break below 16 again, expect 08, expect 02, and fairly important is their 51.96, right? So that was both in the trade indications channel and in the Zoom room. So, again, this is Globex, still takes them a while, but then they make the move lower. And so here comes 16, right? As price is arriving at 16, now you start kind of asking yourself the questions, right? Let's put this up. There are always two scenarios, always a bullish scenario and a bearish scenario. So that's how you have to start thinking: bullish scenario, bearish scenario. If we are in the bullish scenario, what would happen above 16? Right? Well, they would again go up toward 21, 24, and 31. But what happens if 16 breaks? Then it's 08, 02, and 51.96. So you already know this before price arrives, right? Because I posted at 7:30 all the way back here. So you know what to expect as price is arriving at this 16 area. And sure enough, 16 breaks, and from 16 they hit 08. As long as now they're below 16, right? That's the thought. As long as they are below 16, now there is pressure to the downside. 08 is just the first target. There is also 02, right? Can't forget 02. And they hit 02. Not only do they hit 02, but they also test the what? The 51.96, right over here, below 16. Here is the price, 51.96. So now if you're not in the room, right, because 51.96 is the lowest level I have here. So the way to understand a chart is very similar to understanding a book. A chart is telling you a story. So you do not want to kind of disconnect the right now to what happened in the past. Just like in a book, you cannot forget about the previous chapter, right? If you forget the previous chapter, the current chapter and the subsequent chapters are not going to make any sense. When you look back to the previous day, what number do you see that is below 96, 51.96, that was important? 51.78, right? 51.78 was important the day before. In the room, I say it clearly, but if you're not in the room, what can you do? Look back. Look back. 78. So as price is arriving at 96, what are the two scenarios now? 96 is the target from a weakness below 16. 116 broke, there was 08, 02, and 51.96. Now, the two scenarios are, and you should be able to start thinking like this again. If they firm up on 96, where are they going? Try to pause the video and write it down, or just say it to yourself out loud. If they're gonna hold 96, where are they going on the upside? If they're holding 96, where are they going to the upside? Well, first 02, right? Then 08, and then 16. How do I know this? What am I talking about? Well, just look back. Weakness below 16 got them to 08, 02, and 96. Now, if 96 holds, they're gonna go up to 02, 08, and 16, right? What if it doesn't hold? Bearish scenario, right? There are always two scenarios, always. Everything in my work requires two scenarios. One of two things, or sometimes both things, can happen, but at least one of two things will happen. If 96 does not hold, and you look up at the previous day, 78, 78, okay, you are also keeping in mind that you will fade targets. Always fade targets. Let's see what happens with this 96. So far they're kind of holding it. Spiked it a little bit, but they are able to hold it. 02, right? What did we say? 02. 02 is the first stop if 96 holds. came close to 08, not quite, 05 so far. Testing 96 again. This is very common, very common. But same rules apply. Can 96 hold? This is 98.75 so far. Can 96 hold on this retracement down after hitting 02? So far so good. Here is 08. So now the second target from 96 holding was hit. What is above 08? You should know it like this, 16. Can they hit 16? Here we go. 1850, right? The high 1875. 16 is hit. Now, 16 gets hit. 16 was what? 16 was a target from where? From 96 holding. They're testing 16 from underneath. What are the two scenarios? Again, pause the video. What are the two scenarios now that are possible? A bullish scenario and a bearish scenario. In a bullish scenario, 16 holds. If 16 holds, where are they going? You should say 21, 24, and 31. 21, 24, and 31. Possible 42, that's a bit further away, but the 31 was tested already, wasn't it? So you keeping that in mind if 16 holds. If 16 does not hold, the bearish scenario, well, we get to replay the whole thing all over again. 08, 02, 96. 16 looks like it's failing. Trying again. Nope. Failing. Hitting 08. Hitting 08. Do they get to 02? The low is 0275. The low is 0275. What is the ultimate destination at this point from failing at 16? Pause the video, answer it to yourself. What is the ultimate destination here? 5196. 5196, the low 97 and a quarter. You are always fading targets, because if you try to get every last tick out of the move, it will be very frustrating when they stop just a few ticks before your target and you end up giving everything back. So you either have a hard target, meaning 2 or 3 points that you're looking to get and be done, which is actually what I recommend. If you are looking to hold, you are protecting yourself. If you are long, let's say by the time you figured out that 16 is failing, price is at 11, for example. You start protecting yourself or take a partial off when they get toward 08, then 02. When they get to 96, now you are on full alert. They could bounce back. They did it before. They did it before. They bounced back from 96 all the way back up to 16, and at this point you don't know what's going to happen. They could do it again. Now another thing, kind of going back, right? If 96 fails, now what is the bearish scenario? Well, same exact thing. 78. 78. Even though it's not listed in the trade indications here, in a room, I was saying 78, but if you're not in the room, okay, you see that 96 is the lowest level, look up, right? Again, you cannot forget about what happened the day before. 78 was super important. 96 fails, we're going to be heading towards 78. 96 holds, and it's a trip back toward 02, 08, and 16. Looks like it's holding. And 02 is hit. High is 04 and a quarter, so 02 is definitely hit. Here comes 08. High is 06, and the high here is about the same. Yep, so 06 so far is the high from 96 area holding with a low of 97 and a quarter, and then they just fail again. So again, the importance of at least protecting yourself as price is arriving at levels. Now, 06, I really cannot say that it's a fade of 08. I can't say that. the market was just weak and they could not even do the '08. This is a big tell, by the way, but it's a whole different video. It's a big tell when they start missing levels after coming up. They should have come and done the '08, couldn't do it. So here comes the '96 again. Now here is the thing, and it's something I say in the room a lot. I don't like it when they come and retest key levels. If '96 was truly good, number one, they should have done '08 and they couldn't do it. I mean, they did the bare minimum '02, but they couldn't even get to '08. This tells me that '96 is in very high probability eventually will break. And then we're going where? 78. Here we go. So we're going, and they make a low. 79.75 against the 78. The actual is 78.50, but the point is they make 79.75. That's why you fade. In the room, when I saw this, I mentioned right in the room, someone is buying early. What do I mean by someone is buying early? Who moves the markets? People like us? No. The big institutions. Someone jumped in and they very quickly got from 79 to 84, 85, 86. And I mean in minutes. Very quickly. What did this tell me? Now again, pause the video. You should be able to answer it. So, if 78 holds with the low of 79.75, where would they go? This is the question. You should answer 96. You should answer 96. So a lot of back and forth. Obviously, that 78 area is important. 92, 95.50, 96. Okay? Someone jumped in early and started buying at 79.75. In the room I said someone is buying early. They're going to be heading back to 96 as a minimum. Now, as they arrive at 96, same exact thing. What are you asking yourself? There are two scenarios here. Bullish scenario, they're holding 96. Where are they going if they hold 96? Bearish scenario, they test 96 from underneath but then fail again. Where are they going if they fail again? If they fail again, they're going to attempt and do the actual 78. They stopped at 79.75. They fail now, they will probably do the actual 78, and the actual price is 78.50, but call it 78. So they're just going back and forth with this 90. They tried the '02, and once again, look what happens here. The high of 52.50. So they missed the 92 by 6 ticks so far. That is not a good sign. That is not a bullish sign that they miss. Kind of, remember with the '08 earlier? They got to '06, they missed the '08, and this was the telling sign that a sell-off towards 78 was coming. They missed the '02 by 6 ticks. Here is the break. And here is the actual 78. And by this time it's already, no, it's lunchtime, it's dead zone. I just wanted to give this example of how to understand the levels in this trade indications channel, especially if you cannot make it to the room. We can take a look at the Nasdaq as well. Let's take a look at the Nasdaq. So in the Nasdaq by 7:30, 360 was hit. 360 was again fairly important to us most of last week. 360 was hit. Here's what I put in the trade indications channel for the Nasdaq. A bit after 7:30, right? This is the timestamp over here. That if 360 holds, they're going to try for 420, above that 470. If 360 gives way, it is 310 and 275. So again, always a bullish and a bearish scenario. That's my whole work. So 734, so somewhere like here, right? Somewhere here. Price is around. It's already up there to around like 395. I'm sorry. Yeah, around 395. So above the 360. What are you expecting to see? 420. Now, of course, you would fade 420, as you always say. What is a fade of 420? 410, 412, 415, and you are already at 395. So in reality, the most you could have gotten here is maybe 15 to 20 points to be safe. It's still something. It all depends on your daily goals, uh, but that was available. Now 8 o'clock again. I am in Zoom and I'm talking about in the live room. I'm talking about, well, that 360 is important, and you test off 360 and they can firm up again. They would go toward 420. 360 breaks. It's again 310 and 275. So they're just kind of going sideways here, and okay, here is okay. Let's not kind of okay. 360 is here. Here is 360. So unfortunately, we already see the result, but let's call it in real time. You don't know. You don't know, right? As they're coming toward 360. Again, kind of talk to yourself here. You have two scenarios. You're not in the room, so you did not hear me say that if they form up on 360, it's back up to 420. They break 360, it's 310. As price is arriving and you are looking at the trade indications, you tell yourself, okay, this 360 is important, right? Super important. If they form here, I have a trip to 420. They break here, and it's a trip to 310 and lower. So you are ready. They break right through. They go to 330. You're going to fade 310. What is a fade of 310? 315, 317, something like that. So you're already prepared. Here is 20. They get to like what, 18 here. Low of 18. Yeah, and it looks like they want to begin to form up. Okay, so you see this kind of a wick and you get somewhat suspicious. Maybe they're not going to do the actual 10 and the 18 so far. Maybe that's all they can do. If they can form up on that, where would they go? Back toward 360. But they hesitate, right? If it was an outright shot straight up with this kind of a wick, I would say there was a fairly good chance they're going to try for 360. At this point, we just have to wait. See that? Doing nothing. And now this is a test of 310 for sure, with a low of 12 and a quarter. This is definitely within the fading quote, the fading zone of the 310. Price is arriving at 310. Once again, two scenarios. If they form up, where are they going? If they break here, where are they going? You should be able to answer that. If they form up here, back to 360. If they break here, 275. They break. They break. The low is 285 against the 275. I would not say 285 is really a fade of 275. That's a bit, I mean, they got to maybe like 280, 281. I would have said, okay, well, maybe. But this now, if they firm up, it actually becomes bullish again toward 310 and higher. So it looks like, they're not exploding up, but they're thinking about it. They are near 310. They basically are testing 310 from underneath. So they could still break. Again, this is all a test of 310 from underneath. Again, 310 from underneath. That's all this is. The fact that they hesitate for so long means that they could actually still break. I begin to think at this point it takes them too long. If they were truly strong, if the 12 was good enough, they should have shot up already toward 360. But I'm still keeping an open mind. See that? Going nowhere. And now they break. And they, yep, here we go. Low of 274.75. So this is the absolute perfect test of the 275 that I mentioned, what, like 2 hours earlier, right? About 2 hours earlier, I mentioned the 275 in the Nasdaq. Now this is bullish. Now again, you don't know when they first hit 275, you don't see this bar happening, right? So what are you telling yourself? If they form up on 275, where are they going? 310. First place, 310. After that, 360. But first place, 310. Look how quickly they get to the 310. Very quickly. By the way, if 275 breaks, where are they going? There is always a bearish scenario, right? If 275 breaks, where are they going? All I have here is 275. Look at the previous day. What do you see in the previous day? 225. There is a 225 below 275. Okay, so if 275 holds, we're going toward 310. If 275 breaks, we're going to 225. 310. And again, it's a constant thing. I'm not saying you should keep on trading all day. This is just an example. In reality, you hit your daily target, you are done. If you want to keep practicing this, you go in sim. You go in, pick up a sim account, and then do this all you want. If you hit your daily target with your evaluation account or with your funded account, you are done. You want to keep practicing this, be in sim. We test 310 from underneath. What are the two scenarios? The bullish, right? We break through 310, we hold 310, we're going toward 360, possibly even 420. If 310 breaks, where are we going? Right back to 275. They're messing around the 310. Again, it's an important area. It looks like we're going higher, right? So now you're expecting to see 360. But here is what, so let's say we don't know this, hold on. We don't know this. They only get to what? They only get to 43. 343 is not a fade of 360 by any definition. It's not. It's just an outright miss. Remember the S&P with the 08? I spoke about before, a test from underneath. They could not get to 08. Remember again with the S&P, they could not quite get to 02. Remember, rewind the video if you don't remember, because this is really important. This miss, if they start breaking below 310 now, there is a very high probability they're going to be hitting 275. And just a big break here. And so how would the trade look? Let's say you're above 310. So let's say above 310 is 320. Let's say you're long from 320 looking for that 360 or at least a fade of 360. But they only get to 43. You have about 20 points in this trade. I really hope that you at least put your stop to break even, at the very least. I mean, you have 20 points available there. You would be taken out at break even if you put your stop at break even. If you didn't, let's say your stop is below 310 somewhere, so you're long, let's say at 320, and your stop, let's say, is like 307, then it's a loss. Then it's an outright loss. But a break of 310 definitely tells you they probably are going toward 275, and here it is. 275 again, and this kind of a failure is very telling. So even if you did not protect yourself in any way, even though you were 20 points in a trade, let's say, and you lose maybe 13 points on this trade, you could have definitely made up this kind of a loss. But you would fade to 75 with what? 281 about. I would so what was your short opportunity? Let's say a break below 310. So let's say 303, for example, right? A break below 310. From 303 to around 81, 82, 83, you still had 20 points, right? And that's how we arrive at the 275. Okay, well, I hope this was helpful. If something is not clear, please get in touch with me. Um, I understand the way I do things is somewhat different probably than other places, but what I am sharing with you is my understanding of the markets. And for me, it's always two scenarios. I do not pretend to know where price is going. That's why it's not just one scenario. I have no special crystal ball that tells me where price is going. I just know that given a bullish scenario under some conditions, a price would target a certain level. And below a certain level, with some conditions, a price would target some levels underneath. And that is what I share. Very often, prices actually hit, and once in a while, there is something like this, where price doesn't quite get to even what I called the fade zone. A fade of 360 is maybe 51, 52, 53, something like that. But not 43, definitely. This is an outright miss, and this kind of a miss tells you a lot about what is very probable to happen next. So that's it for this video, everyone. Thank you very much.